Hello and welcome, as it is the 24th day of December 2019. My name is Derek and welcome to the Money Charts channel. Let's take a look at both gold and silver. Basically, from my perspective, that's why all bets, trades of the likes type intros is how I'd like to present it. Because whatever you do with whatever I think or whatever I say is more likely to happen, well, if you win, you win. You lose, you lose. And within gold and silver, if you're finding any ways of wagering and bets on it, that's just how it goes. All right, then. So, looking at this via the single-hour term time frame. Very, very, very interesting. This key Fibonacci level of 1740 was resisted right on that level on the 23rd at midnight. 2 in the morning, so the start of the day on the 23rd. Then it pulled back to the 18 average of lows, and this 18 has then twice later been great support thereafter. But before then, it came up to this and it congested at 10. So I've talked about times before where I don't like the chances of being much resistance, and this is exactly what I mean in congesting in a certain area, where we can see it comes up here and it didn't resist 1740 on the next time. I mean, it did for this period and the following thereafter. But from that point on, it supported that level. And it did so for quite some time. 1, 2, 3, 4, 5, 6, 7, like 8, 9 period span. And then it was at 20 hours on December the 23rd when it broke out and it had this leg higher back to the 18 average of highs. And then on the session today at 10 o'clock in the morning, breaking out above this level and 1, 2, 3 periods like this productively to finish off that session. Not going to draw it in here, but we're right at that trend line. Connect this high, this high, this high. It's now, and now without congesting for 3 periods like that, as we move into the rest of the shortened week, we'll call it, with the holidays, and of course the final bits of 2019. It's a very bullish setup, and I was stating in my last video that this is all looking like great bullish setup. So the fact that this has been going on for the last couple of days since I've last done a video, it's been like 2 days since I've even done one period, let alone the crypto side. So the fact we've had this rally is, I'm not as surprised. In fact, it was probably down in here, like 1720 or somewhere in this area when I probably did my last video on gold and silver. And it's just went higher. Daily chart, because this is a single hour time frame, but now let's go to the daily. I do have all these key Fibonacci lines, and if you really want to know them, I don't anymore. No, I'm going to keep them. They're all short-term levels, getting out above 1876, really. But this is one of those really odd. It didn't resist it. But since it's gotten above this, I'm going to be looking for this area to be support. I wouldn't be surprised if there is support at 1740 that would coincide within the 18 average, which means enough time and days would pass, maybe just like 3-4 days or whatever before it would come down there. But the statement, when I see a move concisely getting above this level and really into the upper range of the resistance of October, really the month of October resistance area, is that we're going to be making a move to 1823, which was, well, obviously a key level from before as well. And then what we do after that, well, we'll just wait and see what I call like a now what situation. And really it's just adjusting to the message of the market from that point on, because there's so many different layers that can happen. It didn't go down to 1613. It looked like on the December 6th session that was going to be the case. So adjusting to the message of the market. Okay, so that was the statement here. Couple days of yada yada, just nothing happening, going sideways. That's neither bullish or, it could be either bullish or bearish. How about that? But when we come up to the 18 band and then continue to do all this type of stuff, that's not a bearish situation. For you realize if we're going to come down here, it's not a surprise to go a little bit there, come up to the 18, resist it, and then you're going to fall below the lows. It didn't even test the 18 average of lows once it got up there on the December 12th session. Rather, for several days, it just resisted the highs and really supported the closes not shown. And then the breakout occurred on December the 20th with a couple days of nice follow-through. So to me, it looks like 1823 should be its next key level, and whether we have any fantastic moves that can come into play. As I mentioned, on the single hour time frame, it looks like resistance breaks are going to come in. And when that's the case, longer term time frames, which this is, has the higher chances, and for breaking up trend lines, of larger green candles. I'm not going to switch it over to the Canadian side, but even amongst the same thing with the US dollar, as far as what we're doing within having these highs in here that tried to get above and obviously never held its correctionary move. This is another attempt, and the start of this attempt in here compared to these right now looks better so far. It doesn't mean it's going to work, but it does mean when a move like this in any market happens, when you get above it like this, whatever the resistance areas that it came from, it's always usually going to coincide with that whatever 18 average chart you use or whatever time frame you use for it. That's where it just most certainly needs to hold. And coming down there, you can see if it fails from that point, then you realize significant losses further can happen. And when you see good support there and you're starting to lift off to resistance that would be reestablishing in this case now, you start to, and an example of that is, okay, it goes up to say 2362, and then it pulls back to say 2287, coinciding with this, we'll say, starts to rally higher. We're at like 2320. Well, now you start to realize, okay, it's probably going to get to that point where it's going to get above it and then test like 24, 25, that kind of stuff there. That's just one example. Let's switch it over to the weekly time frame, then I'll move it back to the United States chart for the monthly and quarterly. But in here, we have a spot where we didn't quite come up to this line that I got in 26.5 within its September highs of 2605. It did pull down. I'll call this holding and staying within the 18. It did have many days really holding and staying below it, but it resisted it, but didn't resist it really going lower at all. And then this triple day gain, but especially the session on December the 23rd. And this voids any of the moves it had today. So technically this is breaking out above this resistance here at 24. When you adjust the fact that we don't have the 24th day session. But still, we have what's looking like the correctionary move, working out well. And when we scroll back in here, we look at this line, 2647, it pierced above it here. All of these pierced belows is 1936. Well, this has been this long sideways range. And it's been in it for quite some time before it broke down below it in April of 2013. Over 6.5 years. That's a long period of time. So on the Canadian dollar side, price action and the amount for silver in this dollar term for the spot price, $19 on the lower end, higher end at 26. It's approaching that point now because, and as mentioned there, with the gains not shown in this. Oh, she does it show it. Let me just take a look at the daily chart here. And it does have it because we got December 24th, but it's the same sort of deal with these types of gains that can come in, getting out of that resistance area range. It would just be a phenomenal break. And well, I'll show the long term for both of these. So let's take a look at the monthly chart. And of course, there's only so much data, so there's really no need to go to the quarterly here. But that sideways consolidation and the resistance was a major support that it had for 3 different session hits, as it did so here in September of 2011. Then it did again in December of that year. There was a down December month, so not every December is up, but then it did it again in May of 2012. And then when it came down there in April of that year, it was, or the following year, 13, didn't support it. And of course, we could see one resistance hit and a close hit just recently. But in supporting the 18 highs like this, if it lifts off from this point, oh, wow. For when we see this, we come up to it on this August tamp. Obviously, the finale of these grade 2 moves occurred in September. And within that month, it pulled back. And since then, we can see it's just been consolidating, congesting, and technically has only came back to this area. It hasn't extended its lower prices down towards, well, the 18 lows hasn't been tested. So there's been many opportunities. It could have lifted off in October. No, that didn't do it. Now at December, another opportunity too. But in situation of having support here, lifting off, and if it breaks this, you get to 26. I most certainly don't like the chances of resistance here. Again, in that it might congest here as support or resistance, whatever, but not go down much. And really another way of saying it, it's going to probably got a good chance of holding around 23 on any type of price pullbacks, even 22 maybe at the lowest on a correct move. But sometimes there won't be any, and then regardless, whether there's not much resistance, it does it fast or it does it sooner, later, and much later, whatever. A break of this point means playing around with the previous upper end range, between a low end being 35, previous high of 47, 48. And then we have a previous high test, which is it'd be one of those not too sure deals. We'll get to that when that type of situation occurs, and a lot will be based on how and what's going on at that time frame, and how long it takes, all those sort of situational plays. Because if there's a spot where like you have like 2 months, 2-3 periods it goes up here, 3 months it's like, oh my goodness, big moves, green candles like large, whatever, like 70% as 80% as the best month. If it goes up there that fast, then in that situation, yeah, there's a good chance you could find resistance and maybe even pull back and lose 20, 30%, 40% fast. But something would have drove it interesting to get there if something like that takes place. And you could be saying, well, 200 is possible, I guess, in like 4-6 months, albeit maybe unlikely, but a lot more likely than any 6-month period, including today, would be for any type of like move of that magnitude. Now let's transition it back to the US on the monthly. Same thing here with the 18 lows. How it's supporting it very effectively. If it starts to lift off, you get it in the noticeably over 20 within that high. I don't like the chances that it's going to resist this. No, it's pretty much already did here. And getting above here, we could be seeing some sick, decent, volatile, beautiful gains, because of the reversal of trend, sort of like we've seen in a lot of these other bull market runs. At least this is the ones we've had since the start of the millennium. And when you look at price action of silver, this is where it gets really interesting. Silver's up or down from a particular period. Well, from this low of like $14, it's up like almost 4. That's 25% maybe it's up. And even from this high, we were at like 19 3/4. Now we're almost 18. So we're down about 10%. And well, from this high, it's down almost 3x. Well over 60% down. And then from this low, $4 and change, it's up like 4 times. And back in 1979, if we go back 40 years from this point right now, silver was right around 32-ish or so. So we're down about 50% over the last 40 years. Let's look at the quarterly term time frame. And I do have a high here, and I know these aren't the greatest of numbers, and I could always check, but whatever. $29 was a high, but in a few days from now, we'll be down 50% over the last 40 years. And a few days after that, in January, second week, I think, we can be saying, again, in 40 years, we've been down 60% plus, because it was $50 at this high. As the quarterly chart plays out, we come up to this level, and that's that same situation I've been showing before about you have a good run higher, you could easily have some resistance, and that's what it has had. And well, now with a higher low here, and I mean this higher low from this point, which is to be expected, but a very good higher low, because it came back to the area where it came from, and the 2007, 2008 highs. And even for that matter, the 2006 highs. And we've been in this spot for quite some time. There's been a lot of periods, a lot of quarters in which it is congested within this 18. And this previous one that completed, quarter number 3, was really its first attempt of escaping it. It didn't close above the highs, but it had some time above it. And right now it's in that area of just that point. But when you leave such the correctionary move, which would be the case at like 21 high, 22, 23, the possibility for significant moves again is big. You're expecting, well, previous high in this case, okay, $40, $50. And then getting up there, I don't like the chances of good resistance. In that, it's going to congest there for a while. Maybe all it does is pull back to about like 25 or 30. Or even for that matter, 33. Especially if it resists maybe 60 or 65. And then the breakout of this, oh goodness, it could get interesting, especially fundamentally driven. The fact that I could even say, yeah, 40 years ago it was $50 and now it's under 20, and it has been under 20 for pretty much near the better part of the last 7 years consistently. And when you look at it, it was just consistently for how long? Well, the breakout here, this is October of 2010. And then here we have it leaving this in like 2013. So there's only like 2-3 years, like 3 years or so where it consistently traded above 25. But in chart analysis, and this is why I guess it's good to say it doesn't matter what time frame you're doing, because this could be a 5-minute time frame. If you ever see spots where you get to a resistance and you get there fast, you spend little time there, which is the case here. You got up there, you came down. So the amount of action that you had north of $20 back in 1979, basically from this point on, last year of 79 up until like near the end of January of this month. Okay, there were several weeks where it was consistently above it, but that was it. And then it went down lower. Then it comes back up to it again. But this time it spends more periods, more time there. And then you have the nicer correction like this. So when something like that happens, I realize that it has good probability of breaking out and having good moves just based on that aspect itself. And we'll see how it goes, but this will be a much different game, much different situations with $24 silver, $23 even silver, compared to the last 2 times it first did it in a bull market. The first time it was extremely already well overextended from its previous high. The second time, it was just breaking out of a key resistance looking to retest that previous high. And the third time, well, it would be just starting to break out and restart a new trend in the early stages. Early stages of a breakout, as we can see, are in here. In this point in here, this is where this thing broke out from in the early stages. Here we'll say, thank you for tuning in. Actually, no, gold. I planned it the whole time because it's big. What time are we on? I'll do it relatively quick. And we'll work our way back from 3-month all the way down to probably the hourly, I suppose, because that was a big move on the silver one. I haven't looked at the hourly. In fact, I haven't looked at a lot of these, although, I mean, I look at these all the time, pretty much, especially this. I mean, I've seen this move a lot, but the move, of course, to this high. So, yeah, from this high here, gold's like, yeah, we're talking doubled. $750 or so, maybe 40 years ago. Now it's $1,500. But on this looks like it's leaving the quarterly 18 highs pretty nicely. And as I state, you have a big move. And what a move that was. And then now we have this good long correctionary move. And it looks like that correctionary move is completed. And that started a new bull market. And with the very, very, very early stages of it. Let's see how this plays out. Next up is the weekly chart. No, it's not. It's a monthly. Then it's the weekly after that. Monthly chart. And this is a nice looking setup here. You have the high that we had at around close to, but not quite at 2100. 1920 was the high. Remember, we'll say 19 even. Supporting pretty much near where we are. This level of resistance here at 1539. So we resisted this area of support. But from this down moves, several hits within the highs of the 18. All was declining. Then in here, back in the April of this period here, 2015, I think. This period, it was just not doing much, just resisting this point, another leg lower. Finally got above the 18 average of highs in 2016, and from that point we've been making higher lows and matching in higher highs. This resistance, I'll bring up the Fibonacci level soon, but it matched it in the 13 mid-change level, 13 and a half. We have this higher low from this point here, and then another higher low here. You can count this a higher low to this, but we're looking now wherever the next low happens to be is in at 1167 last. And here's an interesting situation. If this thing just skyrockets and has a huge low move higher, then I'll count this low here as the next higher low. But regardless of the fact that any price correction, the last key number right now you can say is actually, you call it 1042 even. But this thing does look phenomenal in the fact that it's got nicely above the 18 highs in like 3, 4, 5, about 5 periods or so, just congesting as the 18 is coming close to meeting up through it within time and coming up on a great rate of ascent. We got a little bit of green upward movement, but that's only it. It's got to get above this resistance at 1557. Like even really close to 16 is definitely a clear breakout. 1590, I think, is another one of looking at it as. Getting towards that point, then I'd be expecting decently higher there after that. Let's take a look at this with the Fibonacci lines next on the weekly chart. And they represent the high and the low in here. So that 1320 mark represented a 38.2% correction, which to say was a level of resistance was an understatement. The clear breakout occurred June of this year, resisting most certainly well at this next 61.8% mark at 1522. But this magnificent correction most certainly lacked that of price movement. I mean, the most it can go down to is like 14 and a half. Well, okay, whatever. I mean, but it did so over a good extended period of time. It came down the 18 average of lows at the end of September and then started to rally up to this point, unable to break through. So to get this thing going at the that point, possibility it was, but it didn't happen. And then this was a fierce, all things considered. I mean, it obviously could be more fierce, but a lower end of a fierce red candle down, 3 2/3 a week. But it didn't go down any further. It held in there for quite some time, and now we've had to move up back to this 18 average of highs, still in this sideways consolidation. You see, any move here to the high, it could still be resistance. So it's got to have a clear break at above that for me to consider, okay, we'll probably at least, and I think this is an easy pierce above hit if it gets to the next level, but a move to like, we'll even say 1700 or 1690, I think my previous analysis was from before, as a play in which I think it would be able to get up to getting past this level of resistance. But again, from the long-term stuff, we're talking about getting above to this level, new highs like $3,000, $4,000, $5,000 gold. That's been talked about way back here. People were talking about because of the monetary system, how the fiat current system is really its fundamentals itself. That 5,000 gold is coming. We had a small move up to this and this long consolidation. That would be the live real targets, getting above those points. Of course, that's long term. I'm shortening this out. Let's take a look at the daily time frame. And this one in here, again, just getting above here, 18 highs, wasn't able to successfully do so. And this was a failed breakdown, but no fast move higher. The piercing above here, but nothing extraordinary there. This was an interesting extraordinary, but nothing more than that, or just a low-level extraordinary event, because it got above the 18 average of highs, successfully corrected it. So it looked in here on November the 1st that it was going to break out. It really did look good. October 31st, November 1st stamps that this was going to go higher. but it followed through at down moves lower that even broke through this level of support. But why only that? And I say that because when a good bullish setup occurs, usually, and it fails, it can be devastating, and it was not. And instead, this is where it looked like it could have been the next devastating move. November 25th, we resisted the newly declining 18. We spent a few days in here, from like November 25th to like November 28th, the U.S. Thanksgiving time frame. Within this point, I think that would have been it. But anyway, those days in here, at the lows. And then gets above in here. Okay, that's just getting a little more neutral, possibility to be bullish, and of course it has been. And when it successfully finds the lows in here, this is where we can see for several days it was telling you. Whether you looked at it on December 17th, December 18th, December 19th, December 20th, it looks like it might be breaking it above it, and it did so on today's and yesterday's session, as it left the 18 average of lows of 1480. Now it's only up like $20 from that point, or about 1.33%. But the statement of its move, I think, is really more of the larger picture. So let's finish this off within the single hour. And today's move, 9 o'clock, 10 o'clock. Just like silver was on the hour, nice little continuous movements within such, getting out above this level of resistance in here. And we can even see more towards this failed break, or this huge down move. How it didn't progress anything further there after the fact. It quickly came back into this, I guess even that one too, but came back in this previous range. And then when breaking this, which just occurred, well, that's a big, nice bullish sign. So I think as we move forward for gold and silver, moving forward is bullish, both short-term, mid-term, long-term. Therefore, I wouldn't be surprised if we close the year above 1500, and that we even start or even have a good year for 2020. So we close 2020 for both gold and silver with up years, just based on all those long-term analysis stuff that I'm showing, because these are the early stages of the long-term breakout periods. We'll see if it actually happens. And for me, gold and silver, that's the only asset I can think of. And I include fiat currency, cryptos, anything I can imagine that I can put in a safe. And you can put cryptos in a safe because there's private keys. You can put fiat currency in paper rectangles in a safe. And most certainly gold and silver can be put in a safe. And I know confidently that safe, it's gonna, what's in there is gonna still be there from 5 years, 10 years from now, 2 years even. If I was forced to unable to unlock it in that time, I have to keep it locked for 500 days, 1,000 days especially, 2,000 plus days. Gold and silver are really the only two assets I would be very confident with, that I know if I unlock it, that it's still going to, at least at worst, and I expect it to do well, maintain its value okay. Meaning it could lose a little bit of value, but with fiat currencies, you can pretty much lose it all. And cryptocurrencies, that should go without saying as well. But cryptocurrencies, you could have much larger gains. And, well, fiat currency, I don't like its gain potential. That's just my personal feel. Thank you for tuning in. Have yourself a great day, great holiday, and end of the year. Bye-bye.